Yes, what's happening, YouTube gang? Hope everyone has had a nice weekend and looking forward to markets opening on Monday. Obviously, I know a lot of people, when they're first getting into this, they have downers when the market comes to a close on a Friday evening and it's Saturday and Sunday and they've got nothing to do. But like I've said in the groups, this is the perfect time to be back testing, the perfect time to be researching. Market is closed, you can't actually go and do anything live in the market, but there's nothing to stop you bar replaying 2 days if you really have that much withdrawal from the markets. Don't worry, when I first got into this, that's what I used to do. I used to sit there on a Saturday, Sunday with it bar replaying and used to just backtest. That is pretty much all you can do on a Sunday and a Saturday. But yeah, we will speak over the week. It's quite an interesting week for me personally. And this is where I like to say, and I've said in previous videos, that the learning never stops. Do you know what I mean? There is always something that you can refine or learn new in this market. You know, people are coming up with new things and new ideas for you to test out, back test, blah, 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 and potentially implement into your strategy moving forward. Now, I would say that my strategy through all the content videos and stuff like that is pretty basic. It's not, I wouldn't say it's a complicated strategy. Fibonacci retracement being the main tool that I've used in the past, and I still use it to this day. Support and resistance, but obviously people can call that whatever they want. I just call it support and resistance, trend lines, all that sort of stuff. Now, the problem that you've got in this day and age is there's so many different sort of technical things like SMC, ICT, and all that sort of stuff that the old like bread and butter things, they kind of just get tossed to the side and ignored and said, oh, that sort of shit don't work. Okay. I had a back and forth with this guy on TikTok in regards to Fibonacci. If you walked into any institution or bank and said Fibonacci, they'd laugh at you. Okay. The maker of the Fibonacci was a very, very successful trader, and pretty much I know a lot of people that use Fibonacci retracements in crypto market, in stocks, and in FX, and they still will use it to this day. And if anything, people use it, but they change things. There's a lot of ICT and SMC traders that use the Fibonacci level, but they just use it for the 50% of a candle. Do you know what I mean? They still use a Fibonacci tool. So don't know what that guy was on about. He was obviously talking out of his ass. I think he was a little bit bitter that he's probably an old man and just trades the stock markets like old people tend to do. But yeah, this week I've been learning about the quarterly theory. Now, I'm not going to do a video on that until next week because I'm still just getting my head around it. At the end of the day, I now understand what it means and the cycles of the quarterly theory, and sectioning it all like time frames into quarters. It all makes sense, but it's about implementing it. I can't go and do a video on it after a week and say that I've cracked the code. Do you know what I mean? But if anything, I've used it this week in setups and it's helped so much more. It's helped with patience, discipline, waiting for the certain cycles to play out and knowing what cycle that you're in as well. So I'm going to be doing a video on that, and I feel like it's something that guys should implement into their strategy that they're building. Don't start trying to understand the quarterly theory straight away because you're fresh into the markets. You don't even know, what other things you should be basing this on. What's the overall trends, what time frames, all that sort of stuff. This is something that you can add on later on down the line. And, even guys that are teaching it on YouTube, they say, do not just use this by itself. You need to have a strategy to basically, implement this onto. But yeah, patience has been one of the main things that it's made me do this week, and has actually it's benefited my setup so much more. And I don't think I've actually sent out too many. I will have a look on Telegram. I can't remember how many setups I sent out, but I've only actually traded 2 pairs, so gold and GU. GU has been the one that I've been kind of using it on the most because it's the most kind of clear on the actual chart. EU's been a bit choppy because EU pretty much replicates what the DXY does. So whatever the DXY is doing, EU is basically doing the opposite. But GU doesn't solely rely on the DXY. It obviously does for the US dollar, but the GBP part still makes it move different to what EU does. And I can show you an example of that on the actual charts. But yeah, been testing it out on oil as well, gold. But other than that, I haven't really been looking at any other pairs. And it might even get to the basis that I'm only really trading 2 or 3 pairs, and that is it. Because, you know, trying to focus on too many things all at once, you'll miss this setup, you might miss this setup, or whatever it might be. It's very easy to bog yourself down with too many pairs that you're supposed to be implementing this new thing onto. So it's only been GU, it's only been gold. I'll show you those setups. You know, it's just also making stop losses a bit tighter. I've traded golds for however many years, and I've always used a wide stop loss because I'm looking for that wider take profit. Now, there's no real reason why I can't be heading for those TPs, but having a tighter stop loss to make the R to R a little bit more better. Don't know, that doesn't make sense. A little bit more better. Better than having a wider stop loss, put it that way. Oh, I am looking a bit red as well. I spent all day on Thursday in the sun. Gave myself a day off, and yeah, this is the aftermath of it. I was basically at Atlantis Royal and spent the day in the sun and came out a bit red. So it is what it is. But we'll hop over to the charts now and we will have a look at the previous week. Right, so yeah, there wasn't overly a lot of setups. I don't know why I'm in the sports betting section. This is actually quite an active session. Active section in the group, sports betting. Guys, you know, putting out what bets they're putting on football and all that sort of stuff. So it's normally quite funny, like watching. I can't bet obviously over here, but you know, it's quite funny to see these guys sort of making money outside of the FX market, just putting bets on football games and stuff. So that's quite funny. But my trades for the week so far, look, 1, 2, 3, 4, 5, 6. So 6 trades for the week. Gold, GBP USD, gold, GBP USD, another GBP USD trade, and gold. Okay, so those 6 setups is what I took this week, and I took 1 closed at break even. Very, very unfortunate. I will show you that setup on the charts and the reason why I took it. But these ones pretty successful. Gold, again, very unfortunate, but I'm very, very glad that I didn't do what I got told a lot of groups were doing on Friday. Now, Friday is not my trading day. I say this in most of my videos, but I was still here actively looking at how Friday plays out, because Friday is actually not included into the quarterly cycle. Now, you'll see all these sort of stuff, these things here. I've written these on because I'm only learning this thing now. I've only been a week learning it, so I still have to remind myself what the cycles might actually be doing and how to kind of indicate those. So that's why they've got it written down here. This is obviously the indicator. These represent days, but like I said, I'll go through this at a later state. This gold setup here. Now, this was played off of FOMC minutes. And the reason why I had this setup marked out is we had a very, very small fair value gap here. I'm going to start calling it a fair value gap just because, you know, imbalances is the exact same thing. So we had a very, very small imbalance here that we tapped into, but we had some, again, this is going to be a ICT, SMC type, you know, terminology. We had sell side liquidity here, which I was looking, price was literally resting above here, and I put this out in the group. Yeah, so this was it here. This was prior FOMC. We'd had this kind of dip back down, and this was sent out on 8:53 a.m. This was 21st, so I'm, you know, ahead of you guys, 4 hours ahead of you guys. So this was sent out prior to FOMC. But look, there's the bearish candlestick there that we'd had, and we were kind of just dotting around. I had this area, sell side liquidity here. obviously waiting to be swept. You can kind of, you know, with this stuff that I'm learning, you can kind of gauge where price is going to be drawn to before it actually makes its move. So we had this sell side liquidity here, which we were dancing around. I was like, it's going to sweep this, patience, 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 boom. And then I said in the group that this was going to be swept here before we make the move to the upside. Now, my overall target was 2045, I think. Yeah, 2045. But we cut out, or I cut out at 2032. Once I'd seen all this kind of buy side liquidity being swept and us rejecting around this area. Obviously, we didn't have enough momentum to push to the upside, so I just closed off. Which, you know, is not a bad thing to do, because at the end of the day, yes, I say about being disciplined and holding your setups, but you have to also, you know when setups are kind of at their peak and they're not going to push anymore. So regardless of that, that came off of FOMC. FOMC snapped into this fair value gap and sell side liquidity, picked up the liquidity and pushed to the upside. But then on Friday we had, Thursday overnight, I've got my time zone set to New York time now as well, because I'm trying to get myself around the sort of true opens of the session, London session and New York session. So it all comes down into the strategy, the quarterly theory. So that's why I've got it up there. So I'm trying to get my head around, because I've always had London session down there. Now I've got New York. It's trying to just make my eyes remember, okay, well, you know, it's this time in New York, so it's this time in the UK, blah, blah, blah. But yeah, we kind of came back down. We danced around this imbalance again and then pushed back up to the upside. But this is why I'm saying with gold, you know, it is quite hard to indicate setups, but in the same respect, it's knowing what cycle you're in. And the AMDX, and then there's XAMD. These are the quarterly cycles. And I mean, you can go and have a look on some YouTube videos before I even do a video on it if you're interested in it. But it all makes sense. But it's things that I've used in the past anyway. Accumulation, I call it consolidation. Manipulation is, you know, very easy to indicate as well. Distribution and continuation or reversal. Those are just terminologies that are fresh to me, but I know I've used them in the past, but in different phrases. This is what happened on gold. Now, there's where I say being too cautious and a little bit too kind of reformed, whereby you can potentially miss an entry. Now, I'd seen price dipping down. Now, I knew that in the quarterly cycle, regardless of it not actually the Friday, not playing into the quarterly theory, I kind of knew that this right here was the manipulation phase. So this was just price manipulating, making sellers think that, right, we're now pushing all the way down to 2000, blah, blah, blah. And, you know, I was marking out the areas of sell side liquidity down here, and, you know, again, this is where just trial and error, as in me just testing things out. We've got this very, very small imbalance here. This is where, right, you could have taken your entry, but, you know, the quarterly theory and SMC and ICT, all these things, they teach you to, you know, wait for a breaker structure and wait for, you know, an imbalance to be filled to then take the entry. If you look at gold, you know, you would have said that this structure here, you're waiting to be broken, yeah? And then you're waiting for one of these imbalances here. Now, I had this imbalance drawn out on the sell side, so this is a bearish imbalance, but these imbalances can also turn into inverted imbalances, i.e., if it goes through and breaks through the imbalance and then comes back and retests that imbalance and then shoots to the upside, that is an inverted imbalance. So I'd marked this out and I was like, right, do you know what? We've broken structure to the upside. I'm looking for price to come back to retrace down to here, then jump in for my buy. There is my confirmation, because this is just buying and guessing the low. Yes, there was sell side liquidity down over here on the right hand side and a little fair value gap, but there was also sell side liquidity here. And I was being stubborn, thinking that we might push into 2015, and then I'll be looking for the same confirmation to then jump in for a buy, because I was still very, very bullish on the weekly to push into this imbalance that we've got up at 2045, 2050, because I know that price is magnetized towards these areas because there is a lot of liquidity sat in this imbalance. Also knew that we've got buy side here, buy side up here, which were my overall targets on the first setup, which we didn't actually end up meeting, but it's one of them. So I thought, right, okay, gold is just not giving us any type of entry apart from, but again, depending on what I was doing at that given point, I was also waiting for New York Open, New York True Open, which happens around 7:30, which is around here. And again, it's just me getting my head around the setup. Now, looking back, benefit of hindsight, I could have said, right, okay, this was an imbalance. So we had this imbalance here, which price did kind of tap into, right? It did tap into, but there's no structure at the moment. There's no, high or low. There's nothing to indicate that we are pushing to the upside still. So yes, we had this little tap into the imbalance here, but no real forceful rejection to the upside until around 7:15, which would have been, New York Open, which was on the open of this candle here. And then, the method of the New York Open is you sell above and you buy below. Now, you could have had two setups. I actually sent this setup out, which was a 2029 setup, to 2026, 2020, 2020, and then I think the overall take profit was 2017. But I was playing this one very, very close to the chest. We had this entry up here. We were still in the manipulation phase, so we had this dip back down, and I'm like, right, I know that we're still in the manipulation phase. We are going to swipe out early sellers here. That is going to be my entry. This kind of 2029 buy side liquidity swept and then dropped down, which played out. We did end up swiping liquidity. This imbalance here then turned inverted. We did just tap into this one here. Now, you could also say on the minute time frame that this sort of order block here, breaker block, this was where price was also tapping into this area here, where price, money came out, money came back in very, very sharply. But again, we were just kind of tapping into this imbalance here, which was on the buy side, on the 15-minute chart. This was an imbalance here, which we were tapping into, and then this here. Now, again, it's all just part of learning. This imbalance here, we pushed out of, and then this became inverted. This would have been a perfect setup. With this one, we were already break even. I'd said very, very quickly after TP was hit, TP1 was hit 26, bring stops to break even. That was a 30 pip trade there. Bring stops to break even, and I was just hoping for this kind of sell side liquidity to be hit here. I'd actually put 2022 overall take profits to be put, because this was the area that I was actually going to go, right, do you know what? This kind of previous area of support and tested as resistance, this would be my area for jumping in for a buy. But price never came back down here. We tested this, previous sell sides imbalance and inverted it into buy side imbalance. Maybe on the lower time frame, on the minute time frame, there was probably an imbalance here which I could have looked out for, which, yeah, we had this one here, On the minute time frame, this imbalance here, sell side liquidity swept here. You could probably say that this is the manipulation phase. So yeah, that would have been a perfect entry. You could have also had another entry here. Imbalance, field, and you know, gold just started pushing, taking out all this buy side liquidity here. Still is very, very close to 2044, which I'm essentially going to be looking to targets next week, targeting 2044, 2050, and we see how price reacts in this imbalance over here. That is what I'm predicting. Potential sell back down to 2030, that sort of area, and then up to the upside. That is what my prediction is for gold. That is what I'm going to be looking at. But yeah, being very, very patient, but still no losses, so I'm still happy. GBP USD, perfect setup here. Perfect setup. This was my first day of learning about this quarterly theory. So it was quite nice to see a setup actually take place and work out based on what I was learning. But that was a very good risk to reward, 11 pip stop loss, 11.4 pip stop loss. And I can clarify this by going to, there we go, GBP USD buy 26.068 and stop loss was 25.950. So if you look here, okay, let's just make it what it is before anybody has a tantrum. So stop loss was 11.8 pips and entry 20.68. Just clarify that, 26.68. There we can see. And yeah, final take profit was hit on Wednesday, I think. No, Thursday, sorry. Thursday. And yeah, again, definite sort of areas if I was watching, but I was still out on Thursday. This was, you know, a setup from Wednesday, so I was happy to hold this. Thursday, I wasn't actually sending any setups out. It was my day off. But look, perfect area to, again, get back into for a drop back down. You know, this imbalance on the 15-minute filled. And then, yeah, a bit of an accumulation. And then we dropped, you know, tapped into an order block here and then dropped down. This setup here on Friday was a bit of an odd one, actually. I was targeting, we had sell side liquidity here. This was obviously the imbalance that had been previously tapped into and then, you know, reacted off of. So again, this was something that I was watching out for. But we were taking out buy side liquidity here. That wick there was obviously another indication for me to put a little marker. That is a wick where buy side liquidity is sat. So I was looking for that to be swept. That was swept, and then we had a push back down into this imbalance, and then the manipulation back in to try and swipe out this liquidity here, which didn't actually end up happening. But then we dropped, and you know, we've got this again. It's learning to watch things play out and be patient. You know, even though we had this, there's no real indication here that I would be like, right, okay, that right there is a reason to take it, apart from maybe on the minutes, on the minute time frame. Look, we had that imbalance there, dropped, came back up, but again, it's not a real sort of it's just a reaction off of this imbalance still in my eyes. But again, this is just me learning the thing. But I always put these markers here. This is me marking out New York Open. So obviously I'm looking for a retracement back down. So I'm looking for selling above New York Open, New York True Open. But you could have got one or two entries. You could have waited for this bearish candle here and drawn out an imbalance. Let's get rid of this. Drawn the imbalance here. And that would have been your confirmation to take a sell. So, you know, broken structure to the downside. There's the fair value gap there, and that's what we tapped back into, reacted off of nicely. And I'm just watching, targeting this sell side liquidity here because they're equal lows. Sell side liquidity here, and then tapping into this fair value gap here is what I'm looking for. Targeting, it'll be these highs again, but the overall target is still this imbalance to be filled. You know what I mean? We're still filling this imbalance from NFP from the beginning of the month, and that is the same as what gold is doing. Gold is looking to fill this NFP imbalance from the beginning of the month. So this is, you know, again, on the monthly time frame, we already know that we're going to have a very, very big wick down, and potentially a, you know, unless we just have an absolute masterclass of like buying up and then selling right down, the monthly candle's looking a bit bleak. Do you know what I mean? We're looking to kind of close above previous wicks of the month. You know, closing above this 2035 region. That's what the monthly is looking to do. Or it might even continue to push up. But at the moment, there's no real indication of price pushing back down to the downside. You know, from previous videos I've said, that's where I was targeting, but price is failing at the moment. Price is failing to push any further than 1985. If you'd got in at 1985 and held, like, fucking respect to you, off of this imbalance being filled over here, holding from 1985 all the way through this, you know, that's a good 400-500 pip move right there. So yeah, gold for me, I'm looking for upside. GU, same, I'm looking for a push, waiting for this trade to play out and push down and fill this imbalance, and then see how we react off of here. And, you know, again, it's also taking into account the strategy that I already use so far. So, you know, I still am using the the 4 hour, okay? So I can still do my good old fib, right? And just see, okay, so is this imbalance that I've marked out, what's it aligning with? It's aligning with the 78.6 area. So I'm looking, okay, I'm looking to see this 76.8 area met, and then how we react off, dropping down to the lower time frames, watching that quarterly theory play out, you know, the accumulation, the manipulation, the distribution, and the, you know, continuation or reversal. And again, something I'll go over, don't worry. But yeah, sell side liquidity, reacting off of this sell side liquidity, that is what I'm looking for. More liquidity to be pushed back in, and for us to be targeting this buy side here, and into this imbalance here. Overall, where does the golden area line up with this imbalance? Cool. So fib is still being used, taking into account, you know, your round number support and resistance areas. Okay, this is the support level of 126. Does it need to come back down there? Not necessarily, but we are testing 2700. What is that round number? That's the resistance at the moment. So we're looking to try and break through that 27 area into this 27,600 area to then sell off. Fucking hell, so many digits. But yeah, apart from that, oil was the only thing that I took another setup on. This was a mark out of this imbalance here, but I think, look, when it comes to commodities, oil does the opposite to gold, as far as I've seen. Look, gold pushing up, oil pushing down. But this was a setup that I took personally. I didn't send it out. Again, I was testing it out. Simple. Sell side liquidity here in the manipulation phase, and we created this. I can't remember what it's called now. It was another guy that I was watching. It's called something. It's like an SMC something. Breaker structure, fair value gap created here off of this candle. Tap came up, tapped in to this fair value gap, and then just rocketed from there all the way up. We did have another pull back, but yeah, I was looking for oil to continue its momentum into this imbalance here, but I mean, it did come in and reacted well, but again, not a real great kind of mark out for a sell. Do you know what I mean? No real indication for us to sell, apart from maybe this small imbalance here, but not even that is good enough for me to take a confirmation off of. Potentially here we had, no, you see, I wouldn't even say that is a confirmational entry. Yeah, just no real indication for a sell-off or something that I would have taken confidently. Do you know what I mean? It would have just been kind of a guessing and stuck in this accumulation for ages before it actually moved to the downside. But you know, very, very close to taking out this low here, which you know, have we got anything on this side that you could indicate? We have got some imbalances here. And a small imbalance here, but on the overall time frame, I don't know why I do these videos and I always get end up having a coughing fucking fit. On the overall time frame, look, we have got big fair value gaps over here on the 4 hour, so that would be an area that I might be looking at as to get in, maybe a retest of 75 500 or 75 flat. That would be a good area of entry for a potential push up if, you know, we are looking for a bullish flip on oil, which could be possible, or this could just be a retracement and for us to be pushing back down. But yeah, I mean, the price action on the EU, again, filled this imbalance here, tapped into the order block, and reaction wasn't amazing. So, you know, it is something that hasn't really been working out on EU for me. Do you know what I mean? Every area that I've kind of marked out hasn't really played out. There's been a lot of just choppiness on EU, whereas I feel like GU has actually shown some sort of structure. But as you can see from the charts, everything looks a little bit more complicated to what it used to. But, you know, again, it's just, there's no problem in you wanting to learn how to implement something new into your strategy, you know, something that could evidently benefit you. And if this benefits me in regards to being more patient, having better confirmations, things that maybe I've been missing in the 6-7 years of trading that might have, you know, made my win to loss ratio better, blah blah blah, then I'm gonna learn it. You know, I have the time to sit here and do this type of stuff, which, you know, a lot of guys don't. A lot of you guys that are wanting to learn this, you only have restricted amount of time to actually do this because a lot of you might be working. So whereas with me, this is my job. So if I'm looking on a Monday and I know that, okay, well, Monday is the, you know, either the accumulation phase or it is the continuation reversal phase of the quarter for the week, I'm gonna see how Mondays play out to know where we're at in the quarterly cycle. Monday, I've got a full day to just go and watch some YouTube stuff, sit there, mapping this all out on the chart. Where would I potentially get in? What, you know, where would I be targeting? Where would my stop loss be? All this sort of stuff. I have that time free every single day to be doing this sort of stuff, so I can get away with doing it, whereas you guys have only got a very small amount of time. I will just show you before I go how the week actually looks like. Brandon weren't a great week. He had stuck in some JPY madness. This is why I took JPYs off of the cards. But caught a nice gold trades, Euro JPY. I think that was a hold but closed. 24 pips. Still positive for the week, but Calvin, another good week, 315, but you know, he trades things like NASDAQ and US 30. NASDAQ and US 30 are big rewarding pip count trades. Myself, yeah, I ended on 265, and Connor, minus 20 pips, but it is what it is. Like, minus 20 pips on the grand scheme of things isn't a massive loss in my eyes, you know, compared to I've taken a loss week where it's been minus 100. Do you know what I mean? So you know you've got to claw that 100 back. But look, in the education section, I give daily updates of what I'm looking at, how things are playing out, blah, blah, blah. And yeah, profits for the week, people have done pretty well. You know, 1,000, obviously these guys are unfunded. US 500, I don't know what he was doing on there. What did he put for the week? Fucked myself with my own trades. Okay, well, that was obviously his own trade, so not a great one. Some guys are trading Ethereum. I mean, lot sizes are very debatable, but anyway. This guy hasn't managed to get into all of the trades, so he's taken a bit of a loss. But this is, you know, again, what I've said about Telegram groups. If you are not able to take every setup, then you might end up at a loss, whereas everybody else might be ending up as a win for the week. You know, this guy, look, was the GBP USD setup that I sent out Friday, closed at break even, was just one of those. Golds, you know, that was the quick gold 40 pip, 30 pip trade that we took before it coming back and tapping out at entry. But yeah, it's not been a bad week. Still up for the week. So yeah, just looking to see what happens for next week. But yeah, like I said, guys, that is, you know, pretty much the weekly breakdown, weekly forecasts. I'm still heavily involved in mastering this quarterly theory, getting to the point where I can just look at charts now and, you know, have, you know, all these different things that I'm learning implemented onto the chart. Maybe I don't have to draw them out as much, but whatever. But yeah, that's where I'm saying the learning continues. Every single year there will be something else that comes out that you can essentially learn and implement into your strategy. Or if something's not working in your strategy, replace it with something else that does work. Do you know what I mean? There's no problem in having all the tools and, you know, using certain ones. Better to have all the tools there and you know which ones actually work than not having any tools and a few different odd ones that don't work and you keep failing. So yeah, I will do a video this week breaking down the quarterly theory once I feel like I know the basics and you guys can start actually having a proper research of it. I'm not going to say that I'm a master at it, but it is working so far. But I'll do a video on that this week, and you know, you can go and find somebody else. Go and even find the maker of it, which is a guy called Day Quarterly Theory, I think his name is. He's an ICT student. So there you go, ICT student refining something that his mentor has probably not even, I don't think he's mentioned it, to be honest. But yeah, that's it for the video, guys. I'll see you in the next one.